Hi guys, today's session we'll be talking about some of the balance of need in Lentor Modern, and also whether the SG market will crash lah. Because there's quite some of you who come to me and then ask, hey, what they, or rather not say ask lah, you are in a way debating like whether Singapore market will crash and you're waiting on the sidelines or whether there will be a fire sale, yada yada here and there. And so as usual, based on my usual sharings, whatever I share today is just based on my own point of view and own research. So make sure you do a due diligence. So there's a disclaimer. And back to this, a laptop model we are seeing 4 units they are bounced out, returned for sale, and in a way I would say maybe probably congrats to the four of them. Yes, they may lose the 1.25%, but I'm pretty sure they will look back and still not regret about it because there are better opportunities elsewhere. And let's see, we have this article that came out on 1st of November. They are pretty much almost the same article lah, but we just highlight certain key things that because we are talking they were talking about the new GLS land, and it says that there's another piece of land that will only be launched when there's quite some considerable interest by some developers lah. And then what these articles are generally saying that is there's quite a lot of hesitation in bidding fiercely for the remaining land because there's simply too much supply in the area already. There are like 5 or 6 plots of land being launched almost at the same time, and that is going to cause generally quite a lot of concern for the developers because when they launch this next year, then a lot of them will be fighting with each other, especially those whatever is left in Lentor Modern. The reason why the big units are being sold at such a low PSF is mainly because they were being factored in to go and fight with this future competition. Whereas the smaller units they were able to sell because they know there are a lot of people sitting at the sidelines in September and then waiting to pounce on these units that are of a more digestible quantum. But whether these few upcoming developments are going to be selling at a lower PSM, we don't know for sure. Of course, for those of you waiting at Sunlight, if they are selling at lower, then of course you that's what you are hoping for, right? But if they're selling at a higher, then maybe Lentor Modern gets to gain a little bit. But the thing is, nobody knows for sure, and we wouldn't want to leave our investment plans to chance because when you if let's say things don't go according to your way and you look back, you try to look back at other opportunities, you realize that hey, at that point of time, maybe I should have gone for this and that. But now there are whatever Lentor, whatever, all these 2 or 3 pieces of land that is coming up for sale soon. The PSA is not so ideal. Then you realize, yeah, by the time I want to look back, it's too late already. Then what am I gonna go? What am I gonna buy? And then you realize you're stuck. So there's a lot of not there's more gloom rather than enthusiasm for the Lentor area lah. And that's why we've got all these developers that are not so keen on overbidding for all this land. Okay, and then they are expecting the few tenders to be more lukewarm lah. Okay, this one you can read for yourself. Generally, there are more than like 1,300 units that are coming out for sale. If it's like 1,003 altogether at the same time in one single development, it's not so bad. But the problem is you've got 1,003 coming from 2 or 3 or 4 developments together, then that is competition with each other. Whereas is instead of maybe you're talking about one mega development, it's not so bad because everyone your if you're buying high, you're actually helping your neighbors in the area. Whereas you are more of if you're talking about different developments in that same area, you're killing each other. So it's a different kind of logic. That's why you tend to see quite a lot of the mega developments doing quite well, provided you don't have too much competition in the area. Lah. And that's why this kind of kills off there's a lot of saying on the streets there. A lot of agents are saying, oh, as soon as you got one piece of land coming up, then your land is confirm going to be more expensive. It's not really the case because we have seen some cases, example, in some of the areas like Tanah Merah. You've got some that will launch like Glendale Park was launched cheaper than Urban Vista mah. And that was what partly also why Glendale Park was able to perform, but Urban Vista wasn't able to perform. That's why sometimes you have to see what is the prevailing market sentiment and whether you are getting in at a high price. If you are getting in at a very high profit margin for a developer, then you are in for a bad trip. Okay, and then we move on to the whether Singapore market will crash or not, because a lot of people have still been waiting and waiting and waiting, especially since the 2001 period, 2018 period. People been waiting, crashing. Let's take a look compared to a few other countries, because a lot of people saying, US side, they're having a housing crisis, all the other New Zealand, all these are having a crisis, and that's why Singapore's term will come soon. Let's see how much are they actually, um, what's the difference over here. And I base my data based on trading economics. Of course, all these are not fully accurate, and I wouldn't say that I'm an expert in US, so I'm just looking at a more of a general sense, based on general housing data that we have available on this website. Okay, like I said, I'm not an expert, so there is a disclaimer. This is just based on my own research. If you have your own research that is better, that is more accurate, then by all means go ahead. But this is what I'm using as a comparison. Let's see. So US side, the general price market, if you look at 10 years ago till now, it was here to here. And whereas Singapore's market 10 years ago was here to here. If we do some simple math, that would be an increase of 23% for 10 years. I think that is not too bad because we are seeing a lot of increase recently. So we are feeling a lot of fear. There are a lot of people on the street saying, wow, the property market go up so high already. But you must realize that there has been a very long period of stagnancy. Why? Because previously the market went up way too fast. But the thing is now the government has been injecting quite a lot of cooling measures along the way. 2020 there was some, 2021 there was some. So that means the government has been monitoring and making sure that the prices stay in line with the economic fundamentals, which they are still able to. Later we'll show you some reasons why I say that it is still aligned to our economic fundamentals despite the fact that prices has been sky high, like what a lot of people say. But if you look at the same math for US, this one over this one, you're looking at an increase of 100%. And you look at the difference, which one is more likely to crash? I think the answer is very obvious, right? And this is for US side. Let's take a look at New Zealand. A lot of people saying New Zealand, wow, here and there, all the whatever is this. And then if you base on this one is the scale, and this is the scale for Singapore. Singapore was same 23.8% over the same 10-year period. The peak New Zealand already started to come down, but the peak for New Zealand was 900 plus, and then 10 years ago they were at 300 plus. If you look at the percentage increase, it's 138% compared to this. How many times more? So in this case, which one is more likely to crash? Right? So is this expected that New Zealand prices are coming down? I think it goes without saying. But if you're talking about 10 year this kind, if I tell you 10 years you are investing and your returns are 20 something percent, you'll be going like, man, nothing much, nothing too impressive. And that's the whole point, because you're buying into real estate in Singapore. You're not expecting a sky high investment. You're not going like Tesla 2 years ago kind of thing. We are looking at something that is sustainable, that is supposed to be sustainable and more stable for us. Right? If you are looking for something that is super adventurous, I would say don't come to Singapore, because it is not meant for a super speculative play. Are there money to be made? Yes. It just depends on whether you want super fast money or you want decent money. That is more stable. If you want super adventure, then I'm sorry, I don't think Singapore is the right place for you. Okay? And then you've got UK side. Singapore, same thing, 23%. And then we got UK side over here, which gives us about 78%. Okay, 78% increment. Then let's see. So Federal Reserve just delivered another big hike, 75% as expected, because inflation doesn't seem to be coming down. And but the thing is, they also left the message that there is likely going to be a smaller increment in the future, because it has been increasing super fast. But the thing is, they are seeing signs that maybe it shouldn't be too much of a control over the economy, and that's why it is. You see, they mentioned that time to reassess the pace of increase is coming, but the thing is, no decision has been made. So please don't say ATD say rates are coming to come down. No, nobody knows for sure. But it's just that based on what we are seeing right now, it's very likely that they're going to slow the rate of increase. So for those of you who are worrying that this is going to be go through 75 basis point is going to continue again and again and again, then please, I really don't think so. And I really don't think that it's gonna hurt. It's gonna not say gonna hurt, it's not gonna stay that long because it's gonna kill a lot of businesses if it's gonna continue. Because today you're borrowing a $1-2 million for most of you, you're borrowing a $1-2 million loan or maybe up to $3 million loan. But when you're talking about businesses, the one that is most affected by um by all these loan increment, it's not you that it's actually businesses that because they are borrowing hundreds and millions of dollars, billions of dollars, and if you think about it, that's how much interest compared to you. You're paying a few thousand more, but those guys are paying a few millions at the same time, and that is the one that is gonna be affected more instead of us actually. So they predicted, not say predicted, they are speculating there could be a downshift as early as December, but we'll see how it goes. I prefer not to be too optimistic, but I'm prepared. Okay, a lot of people say that you always say here and there, hey, come on, I have like two properties. And then the thing is, of course I'm prepared. I have my reserve fund. I know I already projected, okay, based on how many percent, maybe if up to 4.5%, 5%, am I able to manage? So I do my due diligence. I make sure that my investment is safe so that I foolproof it, so that I don't have to panic even if it goes up to 4+%, 5+%. It's scary for sure. But the thing is, as long as you know you're not being forced to sell, then it's fine. And the thing is, a lot of people think that, some people cannot afford installment. Then what happened? They will have to go on a fire sale. Come on, if so many people based on TDS or what you had previously, you got 60%, now we got 55%, and then we've got assessment based previously based at 3.5%, even at very very low interest rates, and then you've got 4% now, which is 3.5% to 4% because of the recent cooling measures. They based on this assessment. So if you're telling me that a lot of people cannot afford installment and hence they are forced to fire sale, I really don't think so. Yes, are there people who will lose jobs, who will not be able to afford their installment? Possible, but are there going to be a lot of them? I think not really because our installment, our jobs are still quite stable and there's still quite some investments pouring in. Later we'll talk about it again. But imagine today you're looking at a chart that is like this property example for a specific development. You're looking at this. If let's say one or two owners are being forced to sell because they cannot afford the installment, do you think they will have to sell at this price? No, right? All they need to do is just lower to this extent. Maybe they will drop by 2 to 3%. I'm very sure there will be people who think that, hey, wow, this one is a good opportunity. They will start jumping in and they will snapping up. They will start snapping up the deal. So what happens is the chart will look more like this and then continue because of the guy that needs to liquidate. But the problem is what will happen last time in the great financial crisis. It was the 2007 period. It was like this because there weren't so many cooling measures. There weren't ABSD, and then you got a whole lot of people over leveraging. I heard of people who buy 100 units at the same time, and these guys are going to be the ones that are obviously the most affected because once their source of income gets cut off, they are forced to sell 100 units at the same time. Whereas now we are just only looking at one person selling one unit at the same time, and not maybe out of 10, one or two of them lose their job or or whatever reasons, investment fails, so they need to liquidate the house. One or two investments out of 10 units, that's not going to cause a fire sale. Come on. Okay, as simple as that. That's why we have our cooling measures, the recent one on the 30th of September. Uh, then you also got the government coming in to do their fair share. How they raise the civil service pay. So same goes for this one. This one just came out recently only. There's a pay rise for the civil service generally and the MHA, and all these help to stabilize all these because they are all these pay increment. You may think that it's not much money, but it's meant to help us to stabilize where we are standing so that we are not being forced to liquidate lah. Especially government takes care of a lot of people lah. I mean, Of course, lah, I'm not here to suck up the government, but sometimes you do have to give their fair share of recognition because they are prepared. They are generally still quite prepared for whatever it is. Because if let's say you look at a $1 million loan, you look like previously we were looking at 2%. Now we are approaching some people 3+%, 4%. Now mine is somewhere between here and here. And I'm pretty sure that Sora is already somewhere around here already, and I'm very sure that it's gonna go up to here. So am I prepared? I'm definitely prepared. I'm not too worried about this because if you look at this based on $1 million loan from here to here, I have doubled the interest rate. Previously, I'm paying 3.6. Now I'm paying 4,000 plus. $1,000 plus a month extra. Is it painful? Yes. But is it enough to force me to have a fire sale? No. Because $1,000 plus, what can I do to save it? Maybe I drink less bubble tea. I don't go out for buffets. I just save a little bit. I don't go splurge on my holidays. You go to one holiday, you spend 12K, 20K. Uh that's enough to last you for how many months of interest already. So you can see that simple lifestyle sacrifices is enough for you to stop you from having a fire sale. You're not telling me, oh, I want to go on holiday and that's why I need a fire sale for my house. That's not possible, but that's not at least in our Asian mentality in Singapore, because to us we are not like some other countries where, or it's all about rent, rent, rent. For us, ownership, home ownership is a very high priority. A lot of us aspire to own our own homes. So that's why it always comes as a priority. And usually for most people, I'm not saying all in Singapore, we are talking a lot of people, they are focusing on home ownership first rather than having luxurious holiday first. Our priorities generally is home first, whatever is left, holiday. If the home is more expensive, we still go on holiday. But maybe we don't go to such a luxury holiday. Instead of going for a European holiday, maybe we'll go to uh Bintan, Batam, but at least it's still a holiday, right? I mean, yeah, lah, unless you're telling me, oh, by going to Bintan, I will die, then okay lah, maybe you don't buy a house lah. just go and rent lah. And just go adopt some other people's lifestyle lah. Because this is not our mentality. At least I would say maybe in Singapore or maybe in some parts of Asia. And that's why this is the thing here. You see, one of the reasons we are actually at fault for inflation. Previously, it was mostly driven from the outside because of everything else and more expensive outside. But MAS is doing their fair share. They're trying to control monetary policy. They are adjusting our exchange rate so that whatever is expensive outside is still countered by our strong Singapore dollar. But the problem is Singaporeans are so rich. Singaporeans, they have okay, I've checked recently okay, maybe I didn't include this in this series of slides, but we are averaging about 30% to 40% in terms of income, I mean debt to housing debt to income ratio leh. Then what is the remaining 60 to 70% doing? If this 60 or 70% per month sitting in your bank, maybe some goes to the car, some goes to the your groceries, some goes to your whatever you go out to eat, and then remaining what is left. I'm very sure some people don't save one mah. Not everyone saves. Maybe you do have savings, but you still have something left. And what happens? People go shopping lah. And when you've got all these people shopping and shopping and shopping, it kind of like it is like a domino effect. It causes inflation because people are still spending money despite all this economy doom and gloom. You still have people spending money, spending because they can afford to. Because government stops them for spending too much money in the house. What happened? They still want to spend. It is what they call retail therapy by some people. Right? Singaporeans are worried about soaring prices, but at the same time, they're still out shopping for stuff they can do without. And because of this, we are killing ourselves by stretching inflation out. I do have friends who spend money like nothing. They still go to a club, or I go to a club a few $100s, which is something that I cannot do. But people are still doing it. To them, opening one bottle a few $100 is nothing. But these are the factors that are driving economy. So previously we managed. So now the thing is we have to manage our domestic driven inflation. Okay, why we have so much money? Because previously during the COVID-19 period, yes, there were pay cuts here and there, but a lot of people are not spending money, so there could have been savings, and also some people, they make money from stocks, make money from crypto, maybe those people who liquidated crypto before it crashes. And we also got wage increment in 2021. And also we got people who made money from property. They sold their investment property already or kena on block already, then come out. And then we got quite a lot of money from there that is feeding back into the economy. So you can see over here that our consumption has reached a 5-year high, increment of from 74 billion to 100 billion. Okay, my bad. Too much talking. My iPad cannot take it anymore. Okay, pardon the loading, a bit slow. Maybe I think it could be because of the iOS. New iOS is quite a lot of nonsense. So for those sharing iOS, I mean you are using, please don't update to iOS 16. It's a regret for me. Okay, and then back to this. So generally what this article is trying to say that is that there are a lot of people still spending, and in a way we are killing ourselves. And why are we still able to kill ourselves? Because we can probably got too much money sitting around. And that's the funny thing. A lot of people say that, oh, you know what, interest rate are everything expensive. But the thing is, a lot of people have very bad spending habits. They still stick to spending somehow. They just want the money to spend. So it's either you spend on your house, you spend on the your whatever you so called you don't need. Okay, of course, I'm not here to tell you that hey, you cannot spend on whatever things. You cannot spend on Ferrari, or Chanel, whatever thing. I'm not here to judge. And it's not my business to judge. But the thing is, it's up to your own priority. Is it home that comes in more important, or is it your shopping priorities that come in more important? This one is something that we cannot, I cannot control. And it's really up to individual preference. But the thing is here is that if there are people with this kind of spending power, do you think that they will be forced to sell the house because of fire sale? Or will they actually, since it's non-essential item, if they are being forced to go to that to reach that stage where they may have to fire sale, do you think they will still be spending on this? Or will they save the money to actually focus on the home first? Right. So now you see why the strength of our real estate market is there. Because we got people who have simply too much money. And then the last thing over here that we want to share today is that we've got a lot of investment from other countries. Why? Because there's a lot of economic state instability elsewhere. We've got a war going on in the north, and then you've got some election going on in the some other countries lah. And then there are money all coming here. I don't want to mention which country lah. But the thing is, Singapore, based on our MAS chief, Singaporeans are able to absorb. Okay, because when the money comes in, some of the money goes into the real estate market, some of the money goes into business, because all these billionaires are setting up family offices over here. And one of these concerns is that the money is flowing into property, and then the thing is that he is coming out to say that we've got all this under control. Right? So all this money are coming in and helping to drive and boost our market. And we are looking to add as many 20,000 finance jobs. We are not talking about construction or other we are not talking about other hard labor jobs. We are talking about high paying jobs. And these assets are coming in to help us boost our economy. Okay, and the other thing is that our capital markets and banking system are deep and liquid enough to handle large funds flows. In other words, this means that this article is coming up to say that our economy is going strong because we are attracting a lot of capital, and that is why there is very little reason for Singapore to crash. There is very little reason for Singapore's market to crash, because there is the attraction factor that is pulling a lot of money into our country. And instead of complaining about it, we should actually be happy about it. Instead of complaining that people here are fighting our jobs. Yes, it is true. But what we can do is to upskill, and then we have to stand out lah. This bopian lah, because it's competition that drives the country great. If everyone is being too complacent, like a nearby country to us, if everyone is complacent, then there is no competitiveness. Then how will we stay competitive? That is a sad truth lah. Okay, and that's why that is all we have for today. Um, that will be the sharing that we have for whether Singapore market will crash. And for those of you who are still wondering and always coming texting to me, try to argue, debate about, or you're waiting at the sidelines. I'm not stopping you from waiting at the sidelines. You wait at the sidelines. It's just that I'm telling you, don't expect to have a fire sale. If you want, you can wait and maybe wait for that 1-2% drop because of that one vocational or that rare one a few owners that are being uh forced to liquidate. And I even really don't think that they will have a fire sale, because remember, your TDS are again and again previously was 60%, now it's 55%. Even then, last time we got 40%, now we got 45%, 45%. All this money previously were what? Over the past few years, they were sitting around either in your bank or elsewhere and being accumulated. And this will help to pay off whatever in monthly installment that you have, that you may have a little bit of difficulty now because of an income that is being affected, but it would have helped uh to help relieve a little bit of burden now. So all this money has been sitting around, and that's why you have all this strength of the market, because the government is doing their fair share, they are doing their job as well to help protect our market. Okay, that is what we have for today. And anything else, then feel free to text, and I'll see if I can help. Okay, thank you guys. See you. Bye bye.